Hi everyone, this is Jason Burack of Wall Street from Main Street. I just wanted to do a short video today. There was a number of current events that I didn't get to cover in yesterday's Welcome to Dystopia episode that I wanted to bring to your guys' attention if you weren't aware of it. So we're going to go through some current events from the Small Gold website. Louis does a good job. Louis Camarsano, who's been on the show before, does a good job covering the gold and silver markets with more balanced coverage, I would say, than some other websites. Kuz Jansen is also back writing. He published his first article on July 6th, his first one since March. So Kuz is back from vacation or his hiatus. Welcome back, Kuz, to covering the gold and silver market. And there's a few zero hedge stories about the oil market and also Venezuela. Looks like Citibank's going to take over $1 billion of its gold from gold swaps. So let me cover some of the stories that I didn't get to talk about in the Welcome to Dystopia episode yesterday because we covered other topics. JP Morgan wins dismissal of silver manipulation lawsuits. I wanted to talk about this yesterday, didn't get a chance to. I will attach the links to these articles in this short video. Basically, the judge said that there wasn't enough proof from the three consolidated class action lawsuits alleging that JP Morgan manipulated the silver market in 2010, 2011, among other plaintiffs, and they said there wasn't enough legal proof to show that JP Morgan made uneconomic bids. So the level of proof is just in a legal court in the United States is just very, very high. Civil court, it's probabilities, so it's more probable than not. They told me in law school, I'm a law school dropout, I did a semester of it. I actually got pretty good grades, I just hated it. I went there for the wrong reasons. Anyways, though, guys, in terms of legal proof and probability, for a civil case, normally they say more probable than not. They say you need 51% proof, but if it's a criminal case, you need beyond a reasonable doubt, which is normally 90 or 91% if they have to attach a number or percentage amount. So the judge threw out that JP Morgan was manipulating silver because there wasn't enough legal proof. That doesn't mean they didn't do it. It just means the evidence didn't hold up in a court of law. So this was hedge funds and other people involved in the suit. I'll let you take a look at what the judge said if you want to read the story more. Louis, besides in other stories, what he's also covering is that there's a huge gold demand shift from west to east, and he talks about this in his podcast. But that's what the trend has been, for many, many years. But also, what has changed recently is that Chinese, and we see this now from Kuz Jansen's numbers, the first half of 2016 gold demand for China's out from Shanghai Gold Exchange, it's only 973 tons for the first half of the year. So that's lower than the record amount from last year, the year before, 2013, and also 2013. What I think this may tell us is that there's more competition for physical gold besides just from China. Whereas, 2013, when the paper gold price was down in the West, in US dollars and things like that, the demand for physical gold in the US wasn't as large. So India could come in and buy more physical gold, and there wasn't as much competition. Now what this says is China is buying less because, number one, the price is already up, and China tends to be more value investors. So if the price is up a lot, they're probably going to start buying less. Because they like to buy commodities normally when they're down, but there's also more competition to buy the physical gold. We're seeing this with, if you actually believe any physical gold was bought by the bullion trusts like GLD or any of those other ones. They're actually claiming, they bought physical gold. Well, I don't really believe that. But, the Chinese numbers being down, Kuz says that China, if you look in his newest article that he has out, he actually says that China has imported over 16,000 tons of gold already. So he lays out different cases showing you the numbers that China has imported at least 16,000 tons of gold in the last 10 or 15 years. There's also, he says, another case for over 18,000 tons of gold. So I think China is still buying, but, there's more competition for physical metal now. We know from also Jim Rickards on his podcast with the Physical Gold Fund and other places Jim Rickards has talked about, also his Twitter feed, that he goes to Switzerland and he speaks with the gold refiners. He calls one of them Goldfinger, which is just funny. It's always the Bond references with people who buy gold, I guess. I guess it's always going to be like that. But, it's just... I think the demand for physical gold now, the West is starting to come back. The West is normally not a lot of value investors anymore. Maybe with regular stocks, with cash flow and dividends and things like that, people would buy the dips. There was a lot of people in the West buying oil stocks when oil was $29, $30. There was a lot of value investors I was speaking to who were buying oil. Even Warren Buffett was buying, Phillips 66 and Kinder Morgan and other oil related investments or pipeline companies with a lot of cash flow. So they made good profits from those. But the West in general, the majority of investors and managed money in the West do not buy things when the chart looks bad. So that's why China was able to buy a lot of physical gold, and Russia was too, while gold was in a paper bear market in US dollar terms for the last 5 years up until recently when the bull market has restarted. So Lewis talks about this in his podcast with Rory, how the gold demand is coming back to the West because the chart's looking better. And the other stuff that Lewis covers in the articles are also that, gold and silver demand is up in Australia. June gold sales rise 49% from May. And there's also silver demand, huge silver demand in Australia. I think China is also a lot more Chinese now are buying silver now too. Since gold is up so much, I think there's also silver demand. And there's also a lot of Japanese gold, physical gold demand too. The one thing is though that in Japan they have that 8% value added tax on everything they buy. So if you buy, they're not getting anywhere near spot prices in Japan because they're paying an 8% VAT tax on everything. The other last couple stories I want to cover from Zero Hedge. The first one is Citibank. Did they just confiscate $1 billion in Venezuelan gold? We've documented the problems with the Venezuelan economy. Hugo Chavez, when he was alive, made a big deal about repatriating the physical gold in Venezuela. He was, have a parade with the armored cars and floats and stuff like that, bringing the gold back. Well, Venezuela is so impoverished with low oil prices and also bad decisions from their government central planners and the crony capitalists and stuff like that in their country. The daughter of Hugo Chavez is the richest person in the country, I believe over $4 billion. She's only 35 years old. She did not build the business. She did not create, a Microsoft or Google or an Amazon or anything like that. She just stole the money from the middle class and other people in the country and the oil company. So the oil company didn't reinvest any of their oil profits over the years into, increasing production, improving their refining capacity. This is why Venezuela has to export so much of their unrefined oil to Gulf refineries. And they did some loans. They took some loans against the gold from Citibank for gold swaps to get some cash. But it looks like Citibank is going to close out the ability for the Central Bank of Venezuela to borrow. And they're demanding physical gold in exchange so they can get their credit lines back. So this is what you do when, a subprime borrower and the people don't pay their credit cards and stuff. It happens at the countrywide scale. So the people who say, oh, the U.S. is different. Oh, Japan is different. They can borrow as much as they want to, run up as many credit cards, open as many credit cards as they want without repercussions. There are eventually repercussions. Now, obviously, Venezuela is not in the financial position that Japan is or the United States is, so the U.S. and Japan and other more robust economic countries can get away with it for longer, but eventually the chickens come home to roost. The other two stories I wanted to cover are stories about the oil market. I said in the last 10 days that I thought the oil market was going to crack when the oil was 50.55, and we started having the Wall Street guys, draw a line back on the chart saying it was bullish again. Oil's going to 65 or 70 again. There was one oil analyst, I think from Texas, saying oil was going to 100 in the next couple months. Not unless currencies crash or a lot of oil producers go bankrupt. We've had oil producers start to tumble, the oil price start to correct again, oil inventory build most in 10 weeks. We've had oil production increase, surge in oil production it's only by 0.6%, but the oil market is so large that a 0.6% increase is actually significant. So this is the largest oil production increase since October 2015, I believe, for 1 week. So it's large. I will attach all these stories if you want to get into it. It looks like we're going to have a lot of volatility in the oil market, a wide trading range. We could have a potential spike in oil if the dollar were to go really, really low and oil companies were to go bankrupt. But besides this European banking crisis that's imminent and going to get worse and worse, the next 6 to 12 months, we have potential defaults on copper and base metal mining loans with low copper and base metal mining prices that the banks do not hold loan loss reserves for. We have subprime auto loan bubble potentially bursting. There was a story on our Wall Street from Main Street fan page. I can pull that up really quick to show you guys that right now. I'll just pull up the story really quick for the story for. Okay, here we go. Money CNN. U.S. warns of rising car loan risk. So you can get the link there right on our fan page if you want to read the story. The story talks about how the U.S. government regulators are warning that the subprime auto loan bubble is becoming worse and worse, and they're telling the banks that they need to have loan loss reserves planned for it. Well, when have the banks, even prior to the 2008 crash, when have they had any loan loss reserves saved for the housing crash? When have they had loan loss reserves saved for the oil and energy market crash the last couple of years? When have they had it for base metal miners or subprime auto loan bubble or problems with European banks? They just don't. Today's banking system with the leverage ratios and the bankers trying to use share buybacks and using debt for share buybacks to boost earnings and get rich quick, they really do not keep proper loan loss reserves. There's very, very few banks that do. So this article is from CNN. It's from the mainstream. It's actually funny. You get a really, really bearish tone reading most of the article, and in the last two paragraphs, they try to do a little, propaganda spin on it, saying, "Oh, the banks are making a lot better profits now than they were in 2008, and they can easily get the loan loss reserves up to protect themselves from the subprime auto loan bubble." Yeah, right. So if we do have the correction in oil prices, so we are, I think, around 44 again now. If we do go back to the $29 levels or even lower, the banks that were able to delay calling in some of those oil loans, the oil companies were able to produce more and hedge, lock in oil production, would be back in another potential oil catastrophe. So there's a lot of potential black swans and trigger points or collapse points here. We have the European banking crisis. We have the subprime auto loan bubble. We have another potential crash in oil and energy prices. We have the base metal miners that could go bust. I know this from talking at length with Nolan Watson in my interview, and also on the Silver Whedon conference call, talking about how desperate many base metal miners are for capital right now, and no one wants to give them money because of how bad their balance sheets already are, and people are running the numbers. If base metal prices don't go higher, 4 years from now, the base metal miners, a lot of them, huge chunk, probably more than 20%, could be bankrupt. So we're looking at a lot of potential dangerous things. And, I post on Seeking Alpha, comment on gold articles from Kuz Jansen or other things, and people tell me, why do I like gold? I guess these are these Wall Street shill guys. I ask them, I'm a value investor first. I was buying stocks after the 2008 crash. I was buying Buffalo Wild Wings before with my dad, buying other value investing stocks like Vale for a couple bucks a share. It went up, a lot. Buffalo Wild Wings went up more than fivefold since the 2008 crash. Sold that for huge profit. I was buying a biotech stock called Dynavax when it crashed. I think it crashed to 15 cents. I bought thousands of shares of it after the 2008 crash. It went up to $2. So I bought Lundin Mining when it went down to 30 cents, sold it at 5. So people are saying, "Oh, you're just a perma-bull gold bug." Well, I'm a value investor. So name me markets where there's value, and I will look for them. There was value in 3D printing 6, 7, 8 months ago. There's just not a lot of value in many different markets now. If the technology stocks got cut in half, I would be somewhat more interested in them, but they haven't. They haven't really corrected yet. So miraculously, due to whatever reason, either plunge protection team, ESF, Exchange Stabilization Fund, flight capital coming in from China and Europe to the United States into stock and bond markets, large liquidity ones in the U.S., or currency swaps or whatever programs, the U.S. stock market, general ones, it just hasn't had a correction yet. So I think, we're in for a very, very interesting rest of this year. We got the election coming up. Yeah. Well, I think that's it for today, guys. So I think I just wanted to cover some stories I didn't get to cover during the Welcome to Dystopia podcast. Hopefully you guys like our content. We're trying to kill it, and we're trying to show you guys what's really going on in the global economy.